Hi traders, and welcome to the Keyzone Traders Trade of the Week. Now obviously there's been a lot of volatility in the markets this week, and there's been some big moves, and there was especially one big move overnight on Wednesday night into Thursday morning session. So we're going to look at how we can react to that and how we can trade responsibly when we see these big moves in the market. Hi traders, so this week's trade of the week, we're going to look at how we can trade responsibly when we see these big moves in the market, like what happened due to the Russia-Ukraine crisis overnight on Wednesday. You can see here on Wednesday evening the market closed around 14,630. It actually closed at 14,631. And the following day it opened at around 13,990. It was 13,989. So there was a huge move overnight of more than 600 points, which makes up around about 5% of the value of the DAX. So it's a huge move down. And there was obviously a lot of unknowns going into the session because of what was happening with that crisis. So when this happens, we need to be able to trade responsibly. We still need to look at the support and resistance. So we need to be patient to make sure that any trades that we take, it all goes back to just managing risk. Now, and also we need to understand market function, and when we can understand market function as well, we can make sure that we can trade responsibly, we take responsible trades. So this was our report going into that session on Thursday morning. Now we said again that the Russian-Ukraine news was dominating the markets and the DAX was down nearly 5% as we just discussed. We said we had current support of 13,865 to 890, and there was potential to moves below that if we saw breakthroughs of that current support. However, one thing with the market function is that its function is to facilitate trade. So where the market closed and where the market was opening the following day, there was a 600-point gap in the market, or 5% of the value of the market, where there would have been resting orders. There would have been people who would have had orders in that area, and they would not have been able to be filled because the market hadn't actually traded at those levels. So therefore, it's in the market's interest to go back and retrace at least some, and quite often all of that area, to make sure that those orders and those trades actually get filled, because it creates a liquidity in the market. It creates an efficient marketplace. So often when we see these big moves, whether it be to the upside or the downside, you can see what is known as an inventory correction, which is a retracement back towards, in this case, what would have been yesterday's lows or yesterday's close. So we spoke about the fact that because we was massively down, we had a current support zone, which we'll discuss in a minute and show where we got it from in a moment. So we said we could expect a bit of a retracement back towards yesterday's lows, and we had resistance at 14,110 to 14,130, as well as 14,185 to 210. So now let's go and have a look at those support zones and look at the trade that we actually took. So this is the weekly chart. So when you see these big moves in the market, we want to be looking at the higher time frames for our context. We want to be looking at higher time frames for those really strong areas of support and resistance. The volatility in the markets means that if we execute on lower time frames, often we can get chopped in and out of the market because of that higher volatility. So it can create some really good trading conditions when we have high volatility. However, we still need to be very careful. We still need to manage the risk. We need to look at the markets in a slightly different way. So when we see this high volatility, I switch to higher time frames for execution, and also I switch to the higher time frames for my really key support and resistance zones, and I only trade from those key support and resistance zones. So this here, you can see the market here. We had a really strong swing high that had been created around this zone that I mentioned in the report, that 13,865 to 890 zone. So this here was an area that had shown a lot of interest before. It was where the market reacted when the COVID crisis hit back in 2020. That was the sort of top then, and it created this really strong swing high with a really strong move off of it, which meant that there was a lot of participation around that area. So with that in mind, we were revisiting that area, which could potentially have a lot of participation again. So with that in mind, let's go down. As I say, normally I would execute for my day trading strategies off sort of a 1 minute or 3 minute time frame, maybe a 5 or 15 minute. I switched then to look for the 1 hour time frames for my execution. So let's go and have a look at the trade that we took. So as you can see, pre-market, this is the 1 hour chart just before the market opened. So this was a 7 o'clock candle. You can see that the market has moved down below that support zone. It has created that liquidity grab that we always talk about in these sessions, and then it closed back above that support zone. So it had shown that it had taken the stops that it needed to, it grabbed the liquidity that it needed to, and we also had in our mind that the market was down, it was at a very key support area, and we had the potential for a move higher back to the previous day's lows, or to the previous day's closing price. So with that in mind, we actually issued an alert for our expert alert service, which, as you can see here, showed us to look to buy the DAX, entry 14010, stop 160 points, target 160 points. We got triggered into that trade, and we actually managed this trade, and I'm going to show you why we managed this trade in a moment. We had half profit, so we took 50% of our trade at 14.095, and we had our full target at the 160 point target, which was at 14.170. So let's go and take a look at that parameters. So we entered on a breakup of this candle at 14.010. There. We had our stop of 160 points. Now, the reason that we only had 160 points, we didn't have it right below this candle, was because it had already done the liquidity grab. It already grabbed the liquidity that it needed to. So we just needed our stop to be below this support zone, because if it got back below that support zone again, it meant there was something more sinister in the markets going on. It wasn't going to create that retracement that we was expecting, and we wanted to be out of the trade. So we entered here on the signal, on the reversal signal, but we had a bit of a tighter stop. And our target was 14.170, which was up here. And as you can see, that was just a front run of this other resistance zone that we had to make sure, because obviously, although we were expecting that retracement, we were still obviously very negative on the market at this point, because the move down had been so impulsive. There was a lot of a lot going on with that Russia-Ukraine crisis, which could weigh on the market. So although we were going long, we had to manage our risk properly. We don't want to be greedy. We just want to make sure that we book our profits, because it's going against something that could weigh on the markets quite heavily. So we used all of that information to establish our entry, our stops, and our targets. We also took half profits at 14.095, and the reason being, again, this is all just about managing risk, because we had this other resistance zone here at the 14.110 to 130 area. We wanted to make sure that we were risk-free ahead of that zone, just in case the market wanted to tag that as resistance and then push back and head lower. There's always that risk because of everything that was going on in the markets, that could happen. Therefore, we wanted to manage that risk. So in the end, as you can see, this was a really quick trade. We got entered into the market, and this actually hit our target within about 25 minutes. You can see here the alert went in at 8:01. We actually got triggered into the trade at 8:05, and our target hit for a winning trade at 8:26. So it was actually just over 20 minutes for a winning trade there. So this is how, when we see these big moves in the market, and these we can think about this in reverse as well. When we see the big moves to the upside, you can obviously then also get those inventory corrections. But when you do this, you do have to be aggressive with your risk management. You have to be aggressive with your take profit targets, because quite often you're going, or not quite often, you will always be going against a short-term impulsive move where you're going against that short-term order flow in the markets. So I hope you found this useful. It's just a trade, the way that you can trade when there's high volatility in the markets to keep yourself safe. Some things to think about and make sure that you always keep your risk tight. Remember to maybe move up to those higher time frames for execution as well to keep yourself safer. So I hope you found this useful, and I'll speak to you again next week.